Hi, my name is Jon Bey. I am the CEO of Standard Uranium. We are a Canadian junior uranium exploration company focused in the Athabasca Basin of Saskatchewan, Canada.
John, thanks for the introduction. Nice to meet you. Matt usually does most of the uranium companies, but you're an exploration company, and I do quite a lot of the exploration companies. Exploration, it's a difficult game, huh? Tell me about it.
Oh, well, it can be at times, that's for sure. I mean, we started this company back in 2018 as a private company. We spent 2 years functioning, trying to raise funds and move the company forward until we took it public in 2020.
Yeah.
And now here we are, in 2024. We've had 4 years of hard slugging capital raises and drill programs. And, we've seen moments of blips where uranium was really exciting.
Yeah.
And then back to challenging times again. So here we are in, the spring of 2024. We changed our business model last year in the summer of 2023 to a project generator / exploration company. That's really allowed us to transition to a point where we have our biggest and exciting year of exploration ahead of us.
Yeah.
So we have 11 projects now.
Yeah.
Of those 11 projects, we're going to be working on 7 of them in 2024 with 4 and possibly 5 drill programs. Money is flowing in from our JV partners, and we can talk a bit about how we structured our deals and why that was so attractive to get companies in, and how we're driving that forward.
Well, hang on, from the summer last year
Yes.
to now, it's not a lot of time. We're talking 8 or 9 months.
Yes.
And how many farm outs have you done in that period?
Great question. So we've done 4, and we did them in a rapid pace because what we did, which was quite unique, is we basically put them up on a silver platter for new entrants coming into the market. We knew the uranium market was going to be hot. We knew people wanted to get into it, but just showing up in Saskatchewan, the Athabasca Basin, and planting your flag gets you nowhere because you got to have so many more things worked out for us. So what we did, our typical job is we will stake a project, we will explore it, advance it to drill-ready stages, and then we'll get the permits in place to drill it. We'll sign First Nations agreements. We'll line up all the vendors, the drillers, the helicopters, the camps, and we'll provide the exploration team to actually run the program. So all the new vendor has to do, or the new partner has to do, is show up with cash and be good people. We can sign a deal and get drilling right away.
So that was pretty much the kind of the groundwork that you had done in the previous years.
2 years, yeah.
So the previous 2 years, you've got a number of projects basically worked up to be almost drill ready.
Yeah, so we started the project, our company actually, with one project, our Davidson River Flagship.
Yeah.
And then over the last number of years, we've been acquiring good projects as they became available. Now, the Athabasca Basin has a no vacancy sign now. You can't get land. But we were able to pick up good projects over the past 4 or 5 years by staking them. And then we had a nice break due to COVID where we could not have to work them for a couple of years. And now we've got them all to a point where they're ready to be explored, and good geological projects, which is exciting.
And Davidson River, you're keeping as your kind of flagship, and that's sole owned. So you've still got the exploration leverage. I mean, because quite often when you do a farm out, sometimes the investors who are not the farm in company, but the kind of the investors 1 tier back, they often want to go with the farm in company rather than the minority shareholder, because that's where the dollars are going to be spent, and that's where the kind of the greater ownership is going to be.
Great. Yeah. So Davidson River,
you've kept Davidson.
We think that is our flagship for a reason. We really strongly believe that has huge home run potential, and we're going to continue to raise capital and drill that for ourselves and for our shareholders.
Do you get any payments from your farm-ins which will kind of help towards your G&A at least? Yeah,
we do. So a typical deal with our farm-ins is they can earn up to 75% of the project by spending over 3 years. A typical deal is about $6 to $7 million. They pay us cash up front, shares up front, and they do that each of the 3 years. And they also pay us 10 to 12% operator fee to run the project as well. So we have cash flow coming in throughout the year on all 4 of our projects, which covers all our G&A, and it works out to be between $100,000 and $200,000 per month coming into our company.
Is that spend in the ground, or is that kind of cash to the company?
That's cash to the company. Spend in the ground gets steeper and steeper each year.
Yeah.
So year one typical program is they will spend $1 million in the ground. They will spend $100,000 cash, $100,000 in shares, and pay us 10% operator fee, which is another $100,000 to us per project.
And just when you say $100,000 to $200,000 into the company per month, is that per project,
or
is that
that's overall, across them all? Yeah.
Okay, so kind of $1 to $2 million from the operating fees and the payments coming in.
Correct. Yeah.
So that's nice. That covers your G&A.
Exactly.
And
not only that, it also drives exploration in the ground, and that keeps our geologists working all year round. It keeps our vendors working all year round. So we've got fantastic drillers, helicopter people, camps we stay at, and they love us because we're providing them lots of work, and they're excellent at what they do.
And is it the case that kind of everybody's really busy for the kind of 3 months in the summer when the weather's good, and then everybody's kind of not busy? I mean, how do you manage the allocation of the resources?
It's a good question. So we started. We can start as early as January, and we can drill all the way through till probably end of October. So we're trying to space our projects out over that period, give ourselves a little break between projects, and move our drill companies and so forth from project to project.
And what about how much cash you've got at the moment for your own, how much capital have you got for the Davidson River? I mean, because you're working towards a drill program there, aren't you?
We are actually, yeah. So we've got about $1.4 million in cash today in the bank.
Yeah.
We're right in the middle of launching a capital raise. So we're here in London right now raising $3 million. We are those funds are all going towards $2 million is going towards Davidson River, and another two pokes of $500,000 are going to our Corvo and our Rocus project. So those are projects 5 and 6 that are going to be turnkey ready for 2025. So we'll have 6 projects under JV for 2025.
So Corvo and Rocus, you would farm those out as well. They're on they're on
next in line.
Next in line. Good. And I mean, just coming back to kind of the whole thing about exploration and uranium. I mean, uranium is a very particular market. We've seen this, the spot price rise. The whole nuclear demand side of things is well understood, particularly with the audience that you're speaking to. But we're not seeing that really coming down to the valuation in the exploration companies. There's this kind of split. There's everybody says they want nuclear. The uranium spot price has run, and yet the exploration companies are at low levels. They've got beaten up last year and they haven't really recovered. Yeah,
that's a great point, and you're bang on with that one. So if you look at a breakdown of, say, 50 junior exploration companies, uranium's focused, companies who've got a market cap north of, say, 50 million, a lot of those are in the ETFs, and they sort of move up as the market ticks up with the spot price moving up. Those companies sub 50 million market cap, they've been sort of flatlining or gone down over the past year and a half.
Yeah.
So it's challenging. It's tough to continue to speak the positive atmosphere about nuclear and uranium, and people ask us, well, why isn't your share price moving yet? Well, it will. It takes time. The last bull run we saw those markets, those little ones catch up and then exceed some of the other ones. So we're hoping that'll be the case as well. But for us, we don't build our company on hope. We're building it on bringing cash flow in to drive us forward, focus on our flagship Davidson River, and then restructuring our share structure to bring in more investors that understand the upside of where we're going. So we're moving away from typical Canadian type of funds and moving more into international, looking at the Australians, the Americans, the British, bringing in a more diversified shareholder base. And
quite often people will want us to kind of see the use of funds going to something that they can understand. Davidson River, you say you're going to allocate a couple of $1 million to that.
Yes.
What would, I mean, obviously we know what will constitute success, as you know, if you hit a barnstorming hole, but on a kind of slightly more modest approach, what are you looking to get out of the drill program? What are you testing?
Yeah, so it's a great point. I mean, a lot of investors that talk to us, they see it as a binary function. You have a drill program, you make a monster drill hole, and it's a win. Everything else is a loss. They just don't see the progression you're making in each drill program. Realistically, like we're drilling our Atlantic, we're drilling our Canary for the very first time this year. And the Atlantic, we finished in March, 5 drill holes under budget, on time, hit uranium in every single hole. So it was a phenomenal phase 1 drill program.
Yeah.
The same thing we're doing. We're drilling Canary right now. We're, very first drill holes going in there this week. I just left camp a couple of days ago. It's exciting to see, a first program happen. And we're going to Sundog. It'll be our 3rd drill program there. We're advancing on drill results from previous years. And then we're going to go to Davidson River and we'll start our 5th drill program there. Each time we're getting information from the drill core showing us that we're getting closer and closer. The structure we're looking at, the alteration, we're seeing uranium in it. We're hoping for that and aiming to hit that monster drill hole, which leads you on the next path of your company.
And at Davidson River, I come back to your flagship. Yes. I come back to your ownership, the full ownership project. What are you looking to get out of the drill program? What are you testing? Yeah, so it's a great point. I mean, a lot of investors that talk to us, they see it as a binary function. You have a drill program, you make a monster drill hole, and then you moving away from typical Canadian type of funds and moving more into international, looking at the Australians, the Americans, the British, bringing in a more diversified shareholder base. And Are you targeting? Are you going through and targeting something deep? And is it a structure? What kind of style mineralization are you looking for? And how many holes will you get drilled?
Okay, great. So Davidson River is unique. It's in the southwest corner of the Athabasca Basin, which sits right beside Fission's Triple R project, NexGen's Arrow deposit.
Yeah.
Those are basement-hosted deposits. So unlike on the eastern side of the Athabasca Basin, we're not looking at the unconformity model. We're looking in the basement.
Yeah.
So that's where we're going to be drilling. And at Davidson River, we can get to those basement rocks anywhere from 50 meters to 200 meters. And we're not going any deeper than about 400 to 500 meters. So overall, it's very shallow compared to some of our peers who are drilling, 900 meters, 1,000 meters on the eastern side. So for us, we're looking for an economic type of discovery, one that we know if we make that discovery, it can be mined. And we want to make that, the Arrow 2.0 on our Davidson River, which is just, 20 kilometers to the west on that same Patterson Lake conductor.
And have you got a kind of a meter budget in mind? Are you thinking 2,500 meters, 5,000 meters?
Yeah, $2 million will get us roughly in that 5,000 to 6,000 meter range.
Yeah.
Yeah.
Good.
Yeah, very good.
Good luck. When does that? When will you start that?
Well, our goal is to complete our capital raise before the next probably 3 or 4 weeks. Take those funds, get them allocated, lock in all the vendors once again, and begin drilling Davidson probably mid-August and run right through the end of September.
And so that if I can mentally picture the news flow, it's the news on the capital raise, more joint venture news over the next couple of months. Atlantic Canary, Sundog, and then there'll be the start of Davidson River.
Correct. Now, on top of that, so we've got assays coming back from our Atlantic program we drilled in March. Canary's underway right now. We'll start Sundog in mid-July. We'll have assays coming back from Canary. While we're doing that, we're going to be advancing Corvo and Rocus, doing some geophysics and boots on the ground, getting those ready for 2025. Then we kick off Davidson River in middle of August. That'll run us to towards the end of September. There's going to be news flow the entire time. We're going to have our video crew on site with our geologists making, video posts, letting the investors know what's going on. I know a lot of them love to see that. And if you're looking on Twitter right now or on the internet, you can see some of our stuff from Canary coming out this week.
John, sounds like a pretty busy year. Thanks very much for taking the time to come and talk to us, and good luck with the program.
Thank you very much. Great to be back here and seeing you face to face.